Tim Loughran is a professor of finance at the University of Notre Dame and the associate editor of the Journal of Corporate Finance. He tracks the performance of IPOs, and he joins us now from South Bend, Indiana. Welcome, Tim. Thanks a lot for joining us to talk about this issue. So what do you see as sort of the primary reasons here that these Nasdaq IPOs are not keeping up?
Well, you know, the markets are down this year. Nasdaq is down in 2010. S&P is down. Unemployment's 9.6. It's a little bit rough time for these young growth IPOs. The other thing that strikes me is there's no extreme winner in the 43 Nasdaq 2010 IPOs. There's no Netflix. There's no Googles.
I mean, you definitely have had some that have
the overall performance.
I was going to say you've definitely had some like Tesla that have gotten a lot of attention, but that hasn't always translated into actual returns.
No, I think Tesla started offer price about 16. Now it's 20. That's not much of a return in 2010 for investors, given that this company is very young and is very much of a growth company.
And talk to me about some of the other trends that you're seeing there. Private equity firms, for example, that maybe are pulling out of some of their investments.
That's absolutely right. So there's been a number of private equity funds that have gone public. They took these companies private before. Now they're trying to cash out. And the performance of that small group hasn't been outstanding either. Well, what's interesting, go ahead.
No, you go ahead.
Well, I think the interesting factor at about 2010 is that 75% of the Nasdaq-listed IPOs have fallen in price so far this year. That's a real outlier given in the past.
Well, I mean, and normally, even if you had 75% fall, the 25% would do so well that maybe it would bring the average higher, but that isn't happening this time around.
No, it is not, Julie.
I mean, is this just a reflection of the general risk aversion that we're seeing in the markets right now?
I think it deals with the characteristics of the firm. We just, for whatever reason, don't have a big winner. There's only been 43 IPOs so far that have listed on Nasdaq in 2010. In other years, there'll be several hundred.
You were talking about some of the past success IPOs. You look at, you mentioned Netflix, for example, which we definitely have seen that stock go up. I mean, what characteristics does that IPO have that perhaps some of the more recent ones do not?
I think what happened with Netflix is they came into the market in 2002, and people weren't sure if Blockbuster was going to knock them out. And in fact, Netflix over time has just dominated Blockbuster, driving them into bankruptcy.
And another IPO in the past that you were looking at that perhaps is not as successful as it's cracked up to be is something like a PRICELINE.com.
Excellent choice. 1999, PRICELINE.com. If you would have gone back in your time machine, Julie, and you invested in 1999 in PRICELINE, you would have underperformed the market. Now, if you waited a couple of years, I think PRICELINE hit rock bottom about 2003, you would have been extremely successful in your purchase. So I guess the big picture for these IPOs is sometimes you have to wait a little bit. They go down in price, and then that's where the big steals are.
Well, finally, Tim, let's talk about outlook then. You know, you talk about this year being an outlier. Is it just going to be this year that's the outlier?
Hopefully not. I mean, if the market picks up, and the market's up a little bit today, things can turn around for the IPOs.
All right, here's hoping. Tim Loughran is a professor at the University of Notre Dame. Thanks so much for joining us today. Appreciate it.